with unemployment remaining high, sales and production both remaining low. And yet the government are still wedded to their policy of bringing inflation down.
Inflation remains steady at 2.3% last month.
Everyone is talking about inflation, which is having a real-life impact on all of our wallets right now.
Inflation has taken a significant nosedive this October, which seems to be a first since July a year and a half ago. It's a significant drop. Now, this decline has been a reason for relief for many. However, there is still room for caution. There is still a long way to go, with 2024 coming, so it is also safe to say that there is still hope. Let's dive into the numbers to get a proper look into it. The Fed is getting closer to winning its fight against inflation. The string of interest rate hikes since mid or March 2022 continues to chip away at consumer prices. In October, the U.S. experienced a slowdown in the Consumer Price Index, CPI, with the annual inflation rate easing to 3.2%, down from September's 3.7% and marking the lowest rate since July. This decline was attributed to lower gasoline prices and a deceleration in housing costs. Notably, overall prices remained steady, showing no increase after a 0.4% rise in September. Core prices, excluding volatile sectors like food and energy, increased by 4%, slightly slower than the previous month. Despite a drop from June 2022's 9.1% peak, U.S. inflation remains above the Federal Reserve's 2% target. President Biden, while acknowledging the progress, faces public dissatisfaction with his economic management, despite a historically low unemployment rate. In a statement, Biden celebrated the news. Today, we saw more progress bringing down inflation while maintaining one of the strongest job markets in history, he said. I'm working to get results for the American people, and it's happening, and I'm not going to let up for 1 second. The latest Commerce Department report indicates positive signs of easing inflationary pressures, with a 4.5% decrease in the energy index and declining prices for used cars and airline tickets. Housing costs, a key driver of inflation, increased by 0.3% in October, a slowdown from the previous month. While prices continue to rise atop inflated figures, the data suggests a potential halt to the Federal Reserve's aggressive interest rate hikes, as Chair Jerome Powell stated they would act further if the downward trend in inflation showed signs of stalling during their recent meeting. The latest CPI report has delivered a mix of surprises and optimism, revealing a nuanced picture of inflation that suggests both progress and challenges for the economy. The month-over-month headline CPI was expected to rise by 0.1%. But it came in at 0, representing the lowest value since June of 2022, when it peaked at 1.2%. Notably, this figure had reached its highest point since 2005, making the current 0 a significant decline. Stripping out the volatile components of food and energy, the core CPI increased by 0.2%, slightly cooler than both expectations and the year-over-year headline. The year-over-year headline CPI showed a 3.2% increase, slightly lighter than expectations and 0.5% less than the last recorded value of 3.7%. This positive outcome gains context when considering that it was at 3% in June of the current year. The market responded positively to this news, evident in the decline of interest rates from 4.61% to 4.47% and a surge of around 300 points in Dow Jones futures. This optimistic interpretation by the market shows a favorable view of the inflation figures, suggesting that the lower-than-expected numbers align with current economic sentiments. However, the most significant aspect of the report is the year-over-year CPI, standing at 4%, which is 0.1% less than both expectations and the last recorded value of 4.1%. This marks the first time the CPI has fallen below 4% since May of 2021, highlighting a positive trajectory. Despite being under 4%, it's crucial to note that this is the lowest level since the high watermark of 6.6% in September of the previous year. In a notable development, the United Kingdom has also experienced a significant downturn in inflation during October, plummeting from 6.7% to 4.6%, marking a 2-year low. The CPI headline remained unchanged on a monthly basis, defying expectations of a 4.8% year-on-year increase and a 0.1% rise from the previous month, as forecasted by economists polled by Reuters. Now we are beginning to win the battle against inflation. We can move to the next part of our economic plan, which is the long-term growth of the British economy, Finance Minister Jeremy Hunt said. A key metric, the core CPI, excluding volatile components like food, energy, alcohol, and tobacco prices, exhibited a noteworthy decrease to an annual rate of 5.7% in October, from 6.1% in September. The primary driver behind this decline was identified in housing and household services, with the annual rate for CPI hitting its lowest point since records began in January 1950. Additionally, the easing of inflation in food and non-alcoholic beverages contributed, marking the lowest level since June 2022. The Office for National Statistics emphasized the downward pressure on inflation, particularly in housing and household services, offering a historical perspective to highlight the significance of this achievement. The economic landscape, as portrayed by these figures, suggests a positive trend in controlling inflation, indicating a notable shift. The positive market response aligns with the recent decision by the Bank of England to maintain its benchmark interest rate at 5.25%. This decision followed 14 consecutive interest rate hikes that concluded in September, signaling a commitment to bringing inflation back down towards the bank's 2% target. The drop in inflation is particularly welcome for Downing Street, as Prime Minister Rishi Sunak had committed to having UK inflation back in January, when the annual CPI rate was exceeding 10%. Suren Thiru, the economics director at ICAEW, views the steep drop in inflation as a sign that the UK may have turned the corner in its battle against inflation. He notes that the halving of inflation since the beginning of the year is not primarily attributed to government action, but rather to falling energy costs and rising interest rates. Thiru anticipates that while subsequent declines may be more modest, the drag on demand from a softening job market and high interest rates could expedite a return to the Bank of England's 2% target. Despite the positive outlook, caution is warranted, especially in light of ongoing narratives around electric vehicles, power grids, and challenges associated with transitioning energy sources. These factors could continue to impact energy prices, creating pockets of inflation in specific sectors and adding layers of complexity to the economic landscape. Thiru also emphasizes the potential for more modest declines in the coming months. Lindsay James, an investment strategist at Quilter Investors, echoed this sentiment, noting that the Monetary Policy Committee would likely seek additional evidence of a broader economic slowdown before making further decisions. James spoke of the importance of distinguishing between fluctuations in international energy markets and a sustained slowdown in inflation across the economy. A deeper analysis of the components influencing the CPI reveals several surprises to the downside. Owner's equivalent rent, a proxy for housing, dropped to 0.4% after an unexpected increase of 0.6% in the previous month. The dynamics of inflation, influenced by both domestic and global factors, show the complexity of the economic landscape. The Bank of England has to navigate through these challenges, and the latest data reinforces the delicate balance policymakers must strike to ensure sustained economic stability. What this says about the future economy of these countries, both the UK and US, is something of an enigma in itself. So, what do you think about the drop in numbers? Do you think this slight drop in the inflation rates is going to create a huge change or not? An even bigger question, are the data we're shown actually accurate? Only time will tell, huh? That concludes our video today, folks. If you found this video informative, check out our channel for more such videos. Do like, subscribe, and click on the bell icon to stay updated. Thanks for watching. Bye.